So, welcome to episode 16. So, in the last episode, the episode 15, I told you that we will enumerate all the possible questions of accounting for loans payable, right? And I also told you that we will answer those questions based on a sample illustrative problem. So that is why I introduced this problem in the past episode. And also, I completed this timeline because I told you that this is my solution in answering most of the possible questions in accounting for loans payable. But actually, all of the possible questions can be answered by this timeline technique, and you will see that later. Now, if you want to see the previous episodes, please click the link on the description below. Now, let's start this video lecture after this short intro. So, I told you that the questions can be classified as MAP, as in measurement-related questions, accounting or recording-related questions, and presentation-related questions. So let's start with measurement-related questions. So number one question that might be asked of you is the initial valuation of loans payable. So the answer is immediately 4,657,835 because it was already given in the problem. But if it's not, like for example, only the principal is there and another given is the amount of deductions or charges, then principal minus the deductions, that's already the initial valuation of loans payable. Okay? But if the deductions as well as the proceeds is absent, but the effective rate is given, then you have to get the present value by multiplying each of these payments by 1 plus I raised to the power of negative n. Okay? So in this case, we have 1.13 raised to the power of negative 1 for the 1.5 million. Because again, it will be paid only after 1 year. Okay? While the others, we should raise it to negative 2, negative 3, 4, and 5. Now, after doing that, you have to get their answers and then get the sum of the answers and you will get this or an amount very near to this. So, actually guys, I encourage you to solve this. So just pause this video and try solving the present value if it will really result to this 4,657,835. Okay? But please use 5 decimal places for the present value factors because in financial accounting and reporting problems, the factors that will be required are normally rounded off to 4 or 5 decimal places. Okay? So pause the video now. Now, are you done? I assume yes. So let's go to the possible question number 2, which is what is the effective rate? So, based on this problem, the answer, if we are going to, again, base in the sample problem, is 13%. So, we just copied what was given here in the problem. But sometimes, this rate will not be given. So, you have to go or you have to undergo the trial and error. And in doing so, you will have to multiply again these payments by 1 plus I raised to the power of negative 1 to 5. But you will substitute the I with rates that you think that will result to a present value near these proceeds. And again, you need 2 rates and the 2 resulting present values for the next step to happen, which is the next step is the interpolation. So we have already talked about that in the previous episodes. So I hope you still remembered. Okay? But guys, I have a life hack. So, the life hack is if the question has multiple choices, just substitute the rates in the multiple choices in this 1 plus I raised to the power of negative n or any appropriate formulas. It could be present value of 1 like this or the ordinary annuity formula, or the annuity due formula. But since in this problem, we are dealing with multiple non-uniform payments, so 1 plus I raised to the power of negative n is the appropriate formula that we should use. Now, again, if we're talking about the sample problem and there are multiple choices, then apply the rates in the multiple choices if there are, again, multiple choices. Remember, okay? So, again, you need to apply the rates in the multiple choices, if there are multiple choices, one by one until you get the proceeds that is needed. Okay? So most of the time, that particular life hack or technique is much faster than doing the trial and error and the interpolation. Okay? So the third possible question is after this. So, the third possible question is, what is the carrying value of the loans payable at the end of year 1, year 2, and year 3, and year 4? So, these questions is based on the sample problem, which is why I will not ask about the loans payable at the end of year 5, because the answer is clear. It is supposed to be 0 at the end of the maturity date, right? Now, the answers are the following. And these amounts can already be seen in this timeline. That is why I told you before that this timeline, if you complete this, you'll be able to answer all the possible questions. And the bonus is, the timeline is not only applicable in the loans payable and loans receivable, but also in notes payable and notes receivable and bonds and many other topics. Okay? Now, let's go to the possible question number 4, which is, how much is the discount balance? Okay? So, you can be asked about the balance at the beginning of year 1 or at the end of each year. Okay? Now, in order to get the discount, you need to think of the principal as agreed without considering your knowledge about the time value of money. Okay? As if you don't know anything about time value of money. So, what do I mean? So, if you didn't study the time value of money, you will think like this. So, at the beginning of year 1, your loans payable balance is 5 million. And at the end of year 1, you will only have 4 million. At the end of year 2, the balance will be 3 million. And at the end of year 3, the payable balance will only be 2 million. And 1 million is the balance at the end of year 4 and 0 at the end of year 5. Okay? So that's how you think as a layman, as a person who didn't study, as if the time value of money. Okay? Now, the next step is to compare these balances that we got in the timeline where we considered the time value of money. And we versus these to the principal balances that are not considering the time value of money. So there is a difference, right? There are differences for the amounts. So you need to get their differences. And guys, those differences are the discount balances. Since this, let's call them the undiscounted principal amounts, are greater than the carrying amounts. So if that's the case, again, if the principal or the undiscounted principal amounts are greater than the carrying amounts here, so we are going to call them discounts. So, at the beginning of year 1, the discount is 342,165, which is again the difference of this 5 million and our initial value of 4,657,835. Okay? And at the end of year 1, the discount became smaller. It became 236,646, which is again the difference of this 4 million and this 3,763,354. And at the end of year 2, the balance of the discount became lesser again. it's already 147,410. And at the end of year 3, the balance became 76,574. And at the end of year 4, the balance became only 26,529. So again, this came from 1 million minus the 973,471. And finally, the discount became 0 at the end of year 5 because this is supposed to be 0 instead of 22 here. So if this is 0, 0 minus 0 is 0. Okay? So as you have observed, the discount had been continuously diminishing as time passes by. Now, you need to remember that behavior of the discount before we go to the next possible question. But for now, let's end this lecture to keep this video short. So if you learned, please click like, subscribe, and hit the notification bell and select all to be updated on my next videos. You can also comment in the comment section below. So thank you for watching and see you on the next episode.